Hello. I'm back for a second quick video today. In 20 minutes or less, I'm going to try to give you a brief entry level breakdown of shorts, longs, and the proper use of leverage. I'm going to jump right into it. I've got friends and family who asked me for this information, some of my NFT buddies. I'm going to try to cruise through it, get you what you need to know so you can get there, so you can get your feet wet with trading. Jump over to a blank crypto chart because I'm going to show you how to use a tool that's important. It's important for me in my trading strategy. Trading view, there's this long and this short position tool. When you long, you're betting on the market going up. You're going to buy some. And if you're on a derivatives exchange, you're going to buy some and you can buy more than you have in there using leverage. Leverage is not. So you can buy $10,000, $100,000 worth of Bitcoin, only having $100, $1,000 in your account. The 100x leverage, you could buy $100,000 worth of Bitcoin with $1,000. But if you only have $1,000, that is not what it's meant for. If the price goes down 1% on 100x leverage, you will get liquidated on your $1,000 in your account, right? Getting liquidated is not supposed to be a normal thing. You see people with these liquidation emails on Twitter joking about it. You really should get stopped out before you get liquidated unless you are using leverage for the reason it's meant for, and you just have a very little bit of funds on the centralized exchange on the platform. So if you have $100,000 in your trading wallet and you want to trade $100,000 worth of Bitcoin, the idea is you only put $1,000 onto your trading wallet and you can trade $100,000 worth of money with only $1,000 worth of exposure to that crypto exchange. If you get liquidated because you just have enough to trade one trade, that makes sense. But you shouldn't be liquidating your whole trading account. That's not a normal thing. It's not normal for that to happen. I keep a little bit more on there than just one trade's worth. Maybe I'll get into that. Let's get into this tool. It's the long tool. Long tool, short tool, they work the same. You go to the settings. You put in your account size, $10,000. That's how much you have to trade with. Here it is, $10,000. 1% risk is a good place to start if you're new. Even the professional traders normally trade 1, 2, 3%, right? This with a $100,000 or a $10,000 trade account, each trade you will lose $100, 1% of 10,000, and this tool calculates what your size should be for 1% risk on that. So now this is a $10,000 trading account. That does not mean you put $10,000 on the centralized exchange. If that's all you've got, you might get Sam Bankman. You might get screwed. Leverage allows you to only put a little bit on there so you can trade full-size trades with just a little bit on the exchange. That's what leverage is for. So $10,000, my account, 1% risk. I'm going to take this long. I took this long. I think I entered here. Stop loss could have been here. I put a stop loss here. Right? Sweep of that low, sweep of that low. In area of interest, this fair value gap, this was a good long, right? Closed, swing failed, candle closed above that level there. This was a good trade, right? Using this tool, it tells me to have 0.55 in size. If I get stopped out, I lose $100. I longed it to this level here. The take profit does not affect the size of the trade. That doesn't matter. It's less important entering a trade where your take profit is. Yes, you should know where it is, but this tells me 1% risk. I'm going to use 0.55 Bitcoin size, 1% risk. I lose $100 if I get stopped out. Now you can really hone your skills so that your stop loss is closer. That was the sweep. That was the liquidity sweep on that right there. Stop these longers out right here. Stop sitting here. That's the liquidity sweep. What does that mean? The market always tries to stop people out before heading in different directions so the larger accounts can fill their bags. If someone gets stopped out, that forces them to sell when they wanted to be a buyer. They had a buy order, but their stop was set. If someone longed right here and had their stop right here, they got stopped out. The price pushes down right into the sniper buy orders of the more experienced traders. So we'll get more into that. You'll learn more about that when I'm actually trading in my videos. Here we are. So I know my trade size. This would have given me a higher risk to reward. This would have, so stop loss here, the tool tells me to trade 0.46 Bitcoin. Stop loss here, the tool tells me to trade 0.91. Same amount of loss. If I get stopped out, I lose $100. So you can hone your skills, get tighter stop losses, make more money. This risk to reward here is your R's. You get stopped out once, down 1 R. You get stopped out twice, down 2 R's. But hey, look at this. You ended up with 9 R winning trade. Play it through. Play it through. Winning trade, 9R. So for that series of trades, you would now be at a 7.15 R. Making about 10 R per week is considered really good, right? So when you hear people talk about down 1 R, up 4 R, that is where they're getting it from. They're getting it from, pretty much they're getting it from this tool, right? So that is how this tool works. You can adjust your risk. I suggest starting with 1%. I suggest starting with 1%. You get really good, then you can increase it to 2. Otherwise, if you're in a position where there's a really, really, really good trade, lots of confluence, lots of other people that you trust trading it, maybe increase it a little bit. Pass on some more risky trades, some trades you don't think that are that good, and then you can risk a little bit more on another one potentially, right? The short tool works the exact same way. And how does shorting actually work? Shorting works by if you want to short Bitcoin at 60,000, you borrow a Bitcoin at 60,000, you sell that Bitcoin at 60,000, and you owe that exchange of Bitcoin. You have collateral up, right? You have money in your account that allowed you to do that. Bitcoin price goes down to 20,000. You buy the Bitcoin back and you return the Bitcoin. You made $40,000 profit by borrowing and selling a Bitcoin, buying it back cheaper and giving it back. That is how shorting the market works. That's all automated into the system to allow you to just click a button to short, click a button to long in the derivatives account on an exchange. We got a couple different exchanges pulled up here, and I'm gonna show you the different ways you can open an order. Let's take a look at our trade. It told us 0.913. That was our Bitcoin long. So even though I only have $1,000 in this account, I can 0.913. I can do a 913 long or short, only having $1,000 in this account because I'm utilizing leverage, right? So I'm actually able to trade all the way up to, say if I was able to enter, I don't know, if I was able to make this way tighter, right, it would give me an even higher number. So even with such a small amount of Bitcoin in there, 0.3, a small amount of money in here, I can actually trade up to 5.27 Bitcoin with only $1,000 in here. The rest of my money is safe on a hardware wallet out there, being safe, while I have a little bit here on exchange. There's 2 ways I can open an order. You're not going to want to mess with the leverage, just clicking I want to, with the amount in my account. You don't want to just do it that way. You can if you want, but I suggest using that tool, and it said to use 0.913 Bitcoin. right? So we can either open with a market order and it will just buy from the order book right to the right of my cursor, right there at the price, at the spot. Otherwise, you can open a limit order and you have to choose the price which it enters. If you're doing really large trades, you almost have to do this anyways to avoid slippage. If the order book is very thin and there's not very much sells available, people who are selling their coins, not very much people who have buy orders out there. If that's very thin, or the exchange has very thin amounts of sells and buys, you do a large market order and it'll make the price go like that. Huge wick. Now people do that on purpose. They will do the order book's thin. They'll do a huge buy order, which stops a bunch of people out, moves the price up right into their sitting duck sell orders before the price goes down. It's a liquidity sweep, manipulation, whatever you want to call it. It's them forcing people into selling, forcing people into buying because there's shorts here. A short that gets stopped out forces the short to buy the coin back, but they'll force the shorts to get stopped out. Price goes up and boom, right into their orders. Let's keep it rolling. So limit order, you choose the price. So if I wanted to do say if I'm going too short here, 17, let's go $17,060. Order quantity at 0.913. And I'm gonna short it with the stop loss, and I'm gonna put that stop loss in. This would all be on my trading view chart. 17120. So I put my stop loss, I can put my take profit, order price. I'm gonna enter in a limit order. I'm confident it's gonna sweep this one more time, then go low. I can open short. Bybit's interface on the computer is terrible. I highly suggest using the mobile if you're going to trade Bybit. So here you can see it. Limit order was entered. The stop loss is already programmed in. You can see active orders. Here I have a stop loss that's in. I can add a take profit. I can change the stop loss. But when price gets to this level, it will automatically borrow 0.9 Bitcoin and sell it for me, so I can try to buy it back at a lower price. That's how a short works. That's how a limit order works, right? Market would have just bought it right there. So no open positions, active positions. Now on some exchanges, you need to pay attention if your stop loss, which is set up as a separate order, is not still here after your trade is closed. If you go over to some markets, if I wanted to do this same trade over here on Globe, so I'm going to do a limit order, and the limit price was 1710, quantity 0.9. So limit order, and I'm going to sell. So I put a sell limit order in. So open orders, I have this sitting here. You can see it here, right? So I want to put a stop loss here. So this is important. Pay attention. Now I have to go to a stop market. If I do stop market, when the price hits that, it'll instantly sell all of it using the order book. Stop limit, it will allow, price has to chip away at it, right? So I would do stop market. My orders are small. Stop market, take profits, the same thing. I have to individually add the stop add the take profit. Whereas over here on Bybit, it's all built right into the trade. The take profit, the stop loss, it's built right into there. I'm going to close this out so I don't forget it's there. But on a lot of exchanges that I have to go and I have to put a new order stop market. So my stop loss 17,222 or 17,200, same thing, stop market. And then I have to go and I have to do a buy, because here if it hits this, it sells it, shorts it, borrows it, sells it. So now I have to put stop market buy in here, right? So here you can see that's my stop, right? So that is how you enter a stop loss here. Now say if the trade comes up, takes it, I short it, come down, I take my profit, I'm good. Now on a lot of these markets, so say that this all goes good, my trade goes great. Okay, I closed out the trade. Now this does not go away, right? I will show you on some, this reduce order is supposed to do that. I haven't quite figured that out, but so just be very careful that when your position's closed, that you don't have open orders left here camping out that you're unaware of, and then that gets hit. So that's all I'll say on that. You go over this other exchange we got, similar setup. You buy, sell, short, long. And on here, you can add triggers. On DXDY, you deposit from your MetaMask wallet. You can add a stop loss, you can add a take profit, and then these reduce only things are supposed to make it so that your trade, that your stop loss does not add to your order after you close your order out, right? So just be careful after your trades are closed, but similar stuff, right? If I want a long 0.1, whatever it is, my trading view told me to do. Leverage, again, you're not going to be messing around with this stuff. What leverage do I want to use, right? You're going to be choosing your order size. So I can't, because I only have $200 in here, I can't do that 0.9, but so 0.1, it'll pick the leverage for me. I'm not even paying attention to that. I'm getting my trade size off of here, off of my trading view. Buy order. So I'm going to do buy market. It's going to buy it straight out of the order book right to the left of here. Since it's only 0.1, you can see the order book. There is enough people selling Bitcoin right close to the current price that the slippage shouldn't be too bad, right? That I can just do my buy order. Triggers right off of trading view. I'm going to add my stop loss. Here my stop loss is 16,096, whatever it is. This is an old trade. Then you're going to go and enter your stop loss and your take profit. You can close these manually, or you can just put your take profit in and go to sleep and hope it hits your take profit before it hits your stop loss. So we are at 18 minutes. A little recap. This tool, use it, program it. Program it to your account size, your risk. Use it to determine your trade size. Works the same way for shorts. You can go and you can program the colors and make it pretty. Hone your skills so you can get some alpha, right? Alpha is the scalp entry on the swing trade. You get the scalp entry on the swing trade. I was so exhausted from such a crazy week at work. Right here, I saw Bitcoin coming up, and I knew this was an area of interest for me. So here, a lot of people, swing trades. We're going to look at the 12-hour. We're going to look at the 12-hour for swing trades, because that's where you're going to get your important areas of interest. On the 12-hour. This does not show a whole lot of reason to short it right there. But when you go down, you have a loose stop loss, whatever you're doing on the 12-hour, but you go down to the 1 hour. And I was looking for a turnaround. And we got this swing fail right here. Where is it? Oh, I think. Oh, that's why we're on the wrong chart. Some of the exchanges are different. This is the one that I actively trade on. And we went over, this is alpha. We went over the 20 minutes. The internet's giving me some bullshit. So yeah, here it was right here. I watched this happen. I didn't trade it. But see here on the 1 hour, I saw this. Spring fail right here at a trend line. So here would have been my short. So the swing fail, it stops at the top of that wick. 1%. If the trade went wrong, I would have lost $100. And then if the trade would have went right, say all the way down to here, whatever it was, I held on to it for, right, 89R. So I don't know, right? I didn't trade it. I don't get the clout. But so this is a scalp entry on a swing trade. That's where you get your, I don't know. I was gonna short it there. Anyways, my point is scalp entry on a swing trade, and you can get crazy gains. That would have been a $8,000, $9,000 trade right there. So using this tool, you can still only risk a small amount, and it will help you manage your risk while you're trading. So anyways, you guys, that's all I got for you over here. The last thing, I don't know if I mentioned, you're going to have to deposit your assets. You're going to have to deposit your assets into the derivatives account, because that's where we are, not spot. We're not dinking around in spot anymore. You deposit into derivatives. Okay, that is all I got for you guys. We're going to dive into it. No more how do I short, how do I long, right? Short, it's the same thing as long. You just click open short. That's what you do. Your quantity, your stop loss, sell your stop loss, your take profit, you open short. When you're on the derivatives account, you just trade it upside down. That's all I got for you guys. If you know what you're doing, this video is not for you. If you don't know what you're doing, hopefully I was able to provide some value. There's 3 exchanges right there. One more I got for you. Again, no reference codes, no referral codes. The other one is Prime, right? Prime, Globe, DXDY, Bybit. Those are all ones that I trade. Prime allows you to trade ES, right? So you'll see me on there some. So there it is, right? Yes, I'm not going to take your time going to this, maybe some other time. But so here we are in a video 2. Let's go.